GSTR 3B Summary. Since the due date of filing GSTR 1 and 2 for the month of July and August has been extended to September 17, a new return form GSTR 3B has been introduced. This form is to be filed in lieu of GSTR 1 and 2 on two dates, 20th August for the tax period of July and 20th September for the tax period of August. It is necessary to fill in the details of inward and outward supplies, ITC to be claimed, and taxes to be paid. It is to be noted that the GSTR 3B is to be filled only for two tax periods for July and August, and GSTR 3 will be required to be filled for the remaining tax periods. Here in this video, we will explain the nature of each supply and the required value, the ITC to be claimed in each case, and the payment of taxes after deducting ITC claim from total taxes payable. Details of outward supplies and inward supplies liable to reverse charge. The details of outward supply or sale of goods or services, both interstate and intrastate, needs to be mentioned under this head. This has to be supported with inward details of purchases of those goods or services which are categorized under reverse charge. Let's understand the nature of each of these supplies individually. Outward taxable supplies, other than zero rated, nil rated, and exempt supplies, businesses need to provide complete details of taxable value and tax payable on goods, services supplied, other than those classified as zero rated, nil rated, and exempted. Value of taxable supplies. Value of invoices plus value of debit note minus value of credit note plus value of advance received for which invoices have not been issued in the same month minus value of advances adjusted against invoices. Here, value of advances received for which invoices have not been issued in the same month needs to be included in the value of taxable supplies. This is because under GST, businesses also needs to pay taxes on advance received for a future sale or supply. Value of advances adjusted against invoices refers to those advance receipts on which tax has already been paid and which must be excluded from the original invoice value to avoid double tax payment on a single invoice. Total taxable supplies, zero rated. Under this head, it is important to mention the details of taxable value of goods, services exported outside India or supplied to GST or supplied to SEZ deemed export. Let's understand each of these in detail. Deemed exports. These are those transactions in which goods supply do not leave the country and payment for such supplies is received either in Indian rupee or in foreign currency. For example, supply of goods by a DTA to EOU within India is deemed as an export of goods or service. Export under bond or LUT, that is, supply of goods or services or both under bond or letter of undertaking without payment of IGST is also considered as export. Businesses can then claim a refund of unutilized ITC on purchases of inputs used for supplying the exported goods or services. Export with IGST. Any exporter or United Nations or embassy or other agencies or bodies which supplies goods or services or both after paying the IGST can claim refund of the IGST paid. Export to SEZ. Since supply of goods or services to SEZ is treated as zero-rated supply, hence no IGST will be paid. Total outward supplies. Nil rated, exempted. Details of taxable value of all those goods and services supplied for which the rate of tax notified is nil or which have been fully exempted. For example, dairy produce, bird eggs, natural honey are zero rated and exports of such supplies have to be detailed under this category. Inward supplies. Liable to reverse charge. When you purchase products from a supplier who is not GST registered, you have to pay tax on that purchase too. Such cases fall under reverse charge. You will also have to pay tax if you purchase goods or services from a registered supplier, but the product or transaction itself falls under reverse charge. For such transactions, the liability of tax payment falls on the receiver, and the receiver needs to furnish the details of taxable value and tax payable in the form. Non-GST outward supplies. Under this heading, it is mandatory to provide the details of taxable value of goods or services supplied, which do not fall under the ambit of GST. Examples of such goods include alcohol for human consumption, petrol products, that is, petroleum crude, motor spirit, commonly known as petrol, high speed diesel, natural gas, and aviation turbine fuel. Details of interstate outward supplies to unregistered composite dealer or UIN holder. For interstate supplies or sales which have already been mentioned under outward supplies other than zero rated, nil rated, and exempted supplies, out of which supplies or sales have been made to unregistered person, composition taxable person, and holders of UIN, a business needs to mention place of supply, taxable value, and the IGST amount for each. Supplies made to unregistered persons are the ones who do not have a GST registration. Supplies made to composition taxable person. Composition taxable persons are the ones who are liable to pay tax under the composition scheme. Supplies made to UIN holders. UIN is granted to any specialized agency of UNO or any multilateral financial institution and organization notified under the United Nations Privileges and Immunities Act 1947 or consulate embassy of foreign countries or any other person or classes of persons notified by commissioner who shall be liable to obtain UIN. Since you also need to mention place of supply for each supply, an option has been given to add more entries and show all supplies made, even to more than one state. Click on Add More. Here you see an option to select the nature of supply for which you wish to add more entries. Select the nature of supply, fill the details, and click on Save. Eligible ITC. After mentioning the amount of taxes payable for outward supplies and inward supplies under reverse charge, the eligible ITC to be claimed must also be mentioned. Your net tax liability will therefore be the difference between total taxes payable and eligible ITC. ITC available whether in full or part. Import of goods. Amount of tax paid on import of goods needs to be provided. Import of service. The amount of tax paid on receipt of services from outside India needs to be provided. Inward supplies liable to reverse charge other than above. If you have purchased any goods or received any services which fall under reverse charge, then tax paid will be provided as ITC in the subsequent month. Hence, needs to be mentioned. Inward supply from ISD. ISD stands for Input Service Distributor. In case a business has multiple units and is supplying goods or services from all such units, the input service distributor can allot ITC to each unit. The details of such allocations have to be mentioned here. All other ITC, any other credit as may be applicable and not mentioned under any of the other heads needs to be mentioned here. Here it is to be noted that while claiming ITC on tax paid, ITC related to pre-GST tax period will not be allowed to be set off against tax liability shown in GSTR 3B for the month of August or July. ITC reversed. As per Rule 42 and 43 of CGST rules, reversal of ITC is required in case of exempt supplies or non-business purpose use in respect of inputs or input services and capital goods. All other ITC, any other credit as may be applicable and not mentioned anywhere else needs to be mentioned here. Net ITC available will be the difference between A and B calculated above. Eligible ITC as per section 17 subsection 5 negative list for ITC, for example amount paid for membership of a club, health and fitness center is included in the negative list and cannot be claimed as ITC. Others, any other taxes of credit that may be ineligible. Value of exempted, nil-rated and non-GST inward supplies. Exempted and nil-rated supply from a supplier under competition scheme. Value of goods purchased from a supplier registered under competition scheme will be mentioned here. Further, purchase of goods or receipt of services which are exempt from tax or where the tax payable is nil will also be mentioned here. A few examples of exempted goods are sugar and sugar confectionery, judicial, non-judicial, stamp papers, court fee, stamps when sold by government, treasuries or vendors authorized by government. Non-GST supply Value of goods purchased or services received which do not fall under the ambit of GST will be provided here. A few examples of all such goods that do not fall under the ambit of GST are alcohol for human consumption, petrol products, for example, petroleum crude, motor spirit, commonly known as petrol, high speed diesel, natural gas, and aviation turbine fuel. After you have filled all the details and your GSTR 3B is ready to be filed on government portal, you need to follow the process for filing all the details on government portal. You must log in on www.gst.gov.in. Follow our guide for how to process on government portal for filing GSTR 3B.